Okay, great. Excellent, excellent. We're just going to get started a little early today. We could do a little bit of preliminary chat while people pops on.
Yeah,
This is our fourth community call for Solv Protocol, and everyone's absolutely welcome to join. So for today, we're going to be focused on the upcoming $2 million first ever Bond Voucher sale in history, going live next week on the 12th by Strips Finance on the Solv Marketplace Arbitrum. We have two very savvy speakers joining us, Ming Wu, co-founder and CEO of Strips Finance, and of course, our old friend, Ryan Chow, co-founder of Solv Protocol. Welcome to you both.
thanks for having me.
It's brilliant. It's brilliant that we get to have this fun chat on this beautiful Friday night, and I'm sure it's been a long week for you too. So thanks for being here. For those joining us for the first time, my name is Johnny Chak. I'm the community lead for Solv Protocol, and I'll be in charge of posing some questions to our guest speakers today, so everyone can take home with some useful and hopefully profitable information about the sale and this revolutionary debt product that we're going to talk about. So, all right, let's get started. Why don't you guys, introduce yourselves and the projects you're leading?
Yeah, sure. Me, you first.
Yeah, sure. Thanks. Thanks for the intro. Strips Finance, we're a interest rate derivatives protocol. So one of our first products is the interest rate swap. So the interest rate swap allows traders and yield farmers to speculate and also hedge their yields that they're getting from, whether that's from stablecoin farms or from yield farms in any type of DeFi or CeFi protocol. So right now the type of markets that we have are like the Aave USDC pool. We also have Binance and FTX Bitcoin funding rates, and also the US Fed funds rate. So traders can use up to 10 times leverage to trade interest rates, and we think this is going to be a huge market in the future. In traditional finance, it's the biggest type of market in the world.
Awesome. What about you, Ryan?
Yeah, sure. Hey, I'm Ryan, the co-founder of Solv Protocol, and we started this Solv Protocol since October 2020. And before that, I was an analyst at Hong Kong Singularity Financial and a quite skilled yield farmer in DeFi space. Yeah, that's it. Let me just make it just simple. Yeah.
Awesome. I do have a question for Ming, because I've been kind of following your protocol for a while now, and I realized that you guys are built on Arbitrum chain, right?
Yeah, that's right.
Yeah. Any particular reason that you and as I understand, it's a layer 2 chain on Ethereum, right? And any particular reason you guys are building on that chain?
Yeah. So we think that Ethereum has one of the best ecosystems, and also is one of the most robust chains out there. And so we wanted to basically stay within the Ethereum ecosystem, but we needed to find a scalable solution, right? And at the time, there was Optimism and Arbitrum as the layer 2 solutions for Ethereum, and we went with Arbitrum because they were very fast to launch their mainnet. They had amazing support. Their transaction TPS is insane, and they have very low fees. Confirmation times are so fast. They're the fastest of any chain that I've used, even faster than Solana. And they are also very robust. We've had a very good experience with Arbitrum, and I think that Arbitrum is going to keep growing. And they already have about $3 billion of TVL without any token, right? And so you can imagine if they do launch a token, which I think many people are betting that they will, it would be it would grow even faster.
Awesome. That sounds like a really efficient way like to unlock a untapped market. So that's really exciting. Thank you for sharing that. So obviously the topic of the day is the upcoming bond voucher sale. So perhaps Ryan can start off with by just in a few simple words explain to someone who say has never heard of the term, what exactly is a bond voucher?
Yeah, sure. So, yeah, simply put, the bond voucher is a debt instrument that allows DAOs to raise capital. So, on the other hand, it allows the user to get access to bond products to earn a considerable fixed APY through, purchasing this kind of bond voucher. So, bond vouchers could be a pure bond or a convertible bonds, depending on if there's a call option embedded into the bond voucher. And the upcoming bond voucher sales on Solv will be issued as a convertible bonds because most of the investors are so excited about the potential upsides attribute to an embedded call option. So, yep, that's a very simple introduction of this bond voucher. Because I think maybe most of the audiences here are maybe have heard about a bond, right? And no, bond is kind of instruments that is a kind of fixed income instruments.
Awesome. Thank you for explaining that. And I actually noticed a lot of like DAO treasury management talk on in DeFi space, and you recently posted a few articles on that. And I think from my understanding, this is sort of like the direction in which Solv Protocol is progressing in the near future, at least this year. So maybe talk to the audience about the Solv's chemistry or history with debt financing and DAO treasury management. How did we get here?
Yes. I just posted an article to just explain that I think a DAO treasury management is the future of the DAO financing, and also it's quite a necessary for all the DAOs to discuss. So it's been a very a buzz phrase in the DeFi space, and DAO protocols need to obtain and maintain a sustainable cash reserves to make sure that they have a very healthy balance sheet. And so to do so, they always have to sell tokens from the treasury to raise a capital. But we really need a solution which allows the DAOs to get access to or access credit through that's a capital markets, regardless of how liquid their tokens are. So we can see there are a lot of DAOs. Their tokens are not that liquid, but they do have credit. They are credit worthy. So how about to just allow them to just take on some debt, and then they will repay the loan at maturity. So that's why we just push out the bond voucher. We think bond voucher is the one, and it would empower Solv to tap into the bond market and to help all the promising projects and the DAOs to obtain liquidity by leveraging their credit. Yep, that's it.
Thank you so much, Ryan. And some people have been asking me like last month we've launched 2 convertible voucher sales by one by Unslash finance Unslash protocol, I think, and then the other by perpetual finance. And some people have been saying like they're saying they're a little confused, like what is, so the bond voucher has like there's 2 forms, right? There's a pure debt and then convertible bond, and there is convertible voucher. What is exactly the relationship between the 2 products here?
Yeah, you can deem the bond voucher as an upgrade based on the convertible voucher. So simply put, the convertible voucher has a embedded a put option than a bond voucher. So there is also a put option inside of the convertible voucher. So a for all the investors who invested the convertible voucher, they have to bear the loss if because there is a put option as well. So we do believe that a convertible voucher is quite a unique and is quite useful for DAOs. Sometimes, especially they want to sell their native tokens in a decent way, but it's quite complicated and it's not that we now we think it's not that easy to scale it just like our bond voucher, because bond voucher is much more easy to understand. It's just a pure bond plus a call option. So yeah, recently we would just put more strength and time on the bond voucher.
That's awesome. That's awesome. And I promised the audience we're going to get into the details of this sale and the bond voucher in just a little bit. But before that, I do want to cover a bit of a big picture stuff with Ming. And I guess my question for Ming in terms of like DAO treasury management and debt financing is that maybe as a CEO of Strips Finance, you could talk to us about like what your balance sheet is like and what made you initiate this fundraise.
Yeah, sure. So I think, as a protocol, one of the key pain points for new protocols is how do you manage the protocol liquidity. So for us, because we're an exchange as well, so how do we provide liquidity to the exchange AMM, and also how do we maximize our treasury utility, right? And so having this bond voucher structure is very helpful for new projects that aren't able to borrow USDC or USD stablecoin using their own native token as collateral. Whether because there's not enough adoption, or like maybe the protocol hasn't been integrated with Aave. There's a lot of reasons there, but basically it allows us to raise capital without needing to sell our token. That creates downward pressure on the token price. So it's a win-win for both investors and also for us as the project treasury, because we are able to utilize our treasury and also generate more liquidity, and without creating a selling pressure on the token price. So that's where our starting point was, and also we're very we're always very excited about participating in new and innovative financing and DeFi protocols, right? And DeFi structure and products. So I think Solv is doing a lot of really innovative things and really cool things, and we would love to be part of that.
Yeah, thanks, Ming.
Awesome, thank you. And I'm just curious, how did you stumble upon Solv Protocol, and what was the process like from like deciding to raise $2 million to say, okay, this bond voucher is definitely the way to go? What can you give us a story?
I think it must have been we found about Solv Finance through one of our investor networks, and we thought that, oh, this is actually really interesting, different way of raising capital, and rather than doing a token sale or having private investors that, even if you have vesting, would sometimes sell and create selling pressure on the token price, which doesn't help the community. So this way, having this bond voucher, we only give the token if the price goes up, which is a much better way to incentivize the community than having private investors buy tokens at a discount and then having them dump on the community. So that's what we really liked about the bond voucher structure.
Thank you, Ming. Thank you for that. And So speaking of this bond voucher, right? I guess Ryan will be most suited to maybe talk to us about some mechanic side of things. Maybe explain to us like how exactly does bond voucher works? Because there's some key characteristics of the bond voucher that any investor or DAO probably will need to first understand in order to understand this product, right, Ryan?
Yeah, sure. So I think we need to talk about dive into the bond voucher, the parameters first, because for Solv we are just minting different types of financial NFTs, and different a kind of a parameters would decide the different kind of financial ownerships behind the Solv vouchers. So in terms of the bond voucher, there are three parameters. One is the face value. So it's the amount that can be redeemed for at maturity, and it's dominated in stablecoin. So like for investors, if you got a bond voucher which the face value like is like $1 million, it means that you would be able to get $1 million back at maturity. So that's face value. And the second parameter would be maturity date. So yeah, it's very simple. It's the date on which the bond voucher will mature, and which the face value can be redeemed, and also which the embedded call option can be exercised. So that's the maturity date. And then the strike price. This is the third parameter here. So it's a specified unit price where the underlying assets can be purchased at maturity. Say the strips finance a bond voucher, the strike price is at $3. It means that
Can can you still hear Ryan? Because I couldn't. I think he's breaking up
Yeah,
a little.
yeah,
can you hear me?
Oh
Yeah.
yes, we can hear you now.
Oh,
Awesome.
sorry. It seems
Yeah.
yeah, I just
No
cut off.
worries. It's just like three seconds.
Okay, so yeah, I was talking about a strike price, right? So yeah, so strike price is the specified kind of unit price, where the underlying assets can be purchased at maturity. So say the Straps finance a bond voucher, the strike price is at $3. It means that you will be able to convert the debt into the Strips tokens at $3 if the price of Straps tokens can be higher than $3 at maturity. So that's strike price. So yep, and it's quite simple for all the DAOs to take this solution. Also for the investors to purchase bond voucher. So DAOs come to our protocol, mint voucher, list it on the marketplace, and all the investors just come to our marketplace to purchase some bond voucher and hold it until maturity. But one thing here is that you could be able, for all the holders, investors, you will be able to cash out the bond voucher before maturity, because it's a financial NFTs, and you can just sell it, list it on the marketplace, just like what a DAOs did before. So yep, that's it. That's a very simple intro of the mechanism, the bonds voucher mechanism.
Right. That was great breakdown. Thank you, Ryan. And so maybe for this sale, and maybe Ming, if you can tell investors what are maybe give them some specifics about the sale, about the strip bond voucher. That will be live next week in terms of some key numbers that they need to keep in mind when they invest.
Yeah, so we're looking, so the bond voucher will be raising $2 million USDC on the 12th of April at 1 p.m. UTC time. And it will have 5% yield in USDC, 5% yield in the strips token, and 3% yield in Solv vouchers. And so that's a total of 13%. And if the price of strips tokens is higher than $3 after 90 days, then users or investors will be able to receive Strips tokens at $3 versus whatever the market price of Strips token is. So the market price of Strips could be $5-6, but investors will be able to buy at $3. And if the price is below $3, then users will get their USDC investment back plus the 13% yield.
Awesome, thank you. We've covered a bunch of stuff, like about the issuing of the bond voucher, and the preparation work we do before the issuing. I guess the elephant in the room is repayment. The question that I've been having lately when I look at this product, and Ryan, we have talked about this a lot of times, is that what sort of reassurance can the bond voucher issuer, like Strips here, offer to investors that are buying this product and would like to know that they're not taking a big risk here? Maybe Ryan, can you take this one?
Oh yeah, go ahead, Ryan.
Oh yeah, maybe yeah, you first, and then maybe
Okay.
I can just explain from my side. Yeah.
Yeah, so I would say that like our treasury is basically underwriting this deal as well. So if there's any loss of funds, which we feel will be extremely unlikely, we will actually reimburse it from our treasury funds. So that's the guarantee that we're providing investors.
Yes. I think that's a very good point from Amin, and because for Strips Finance, as we know, they do have a lot of treasury, a lot of stable coins in their treasury wallet, so they are very strong to to just repay the loan. We think so. From our side, how we evaluate the risk behind the bond voucher, there are three things we are considering. One is collateral. So, because over collateralizing always make the investors be quite convenient. That's it's not that risky. So, like for Strips Finance case, is around is 2x over collateralized, 100% in ours in Solv smart contract, and then the other 100% in the multi-sig wallet. So that's two x collateral. Just like that, just take a Strips Finance as an example. And secondly, we have a third-party fund manager, and because the funds raised by the DAOs would not controlled by DAOs themselves, but also controlled by a neutral kind of parties, including Solv Protocol and some third party, a reliable third party, to make sure that the funds we raised would be safe or under the control. So that's the second thing, that we can make sure that the funds or the certainty of the a repayment. That's the second point. And the third point is the on-chain IOU, because all the DAOs need to sign it's signed powered agreement, acknowledging the DAO's liabilities for the debts. So including some details such as like the dates of the agreements, the amounts of the debts, the dates for repayments, the means of a repayments kind of thing, and finally the signature of the DAOs. So we do believe that DAOs do have credit in the space, and especially for some for Strips Finance, that kind of projects, they do have credits, so they over collateralize themselves, and also they have the funds they raise is under the control, and also they have credits. Overall, I think it's quite a not that I think it's not bad as a investment kind of instruments or targets. Yeah.
Ming, do you have anything to add here, or are you good?
Yeah, yeah, nothing to add. I 100% agree with that.
That's fine. Great. So yeah. So basically, Ryan, is so the three. What I'm hearing is like the three binding policy modules, right? Of the bond voucher. First being the collateral, which the strips finances. I think the number is like 4 million value of the native tokens, 4 million in value, and the third party fund manager and on chain IOU, which is the issuance and redemption statement that Strips Finance has signed signed earlier this week. I guess the logical question to ask next is the repayment process. Maybe Ryan, can you like walk us through from the date of maturity to a possible event of default? What's that process
Yeah.
like?
Yeah, sure. And so I think, yeah, it's quite important for all the investors to understand the exact kind of repayments process. So the first step would be we would check the options a the condition is met to make the options being exercised. So if so, the investors would be paid tokens converted from the bond voucher, and that's the first step. But if not, then we need to take a look at the multi-signature wallet that monitors the use of the proceeds. They would issue the funds back to the investors. So, and if there are some remaining balance, then the DAOs would send the treasury funds to the Solv smart contracts to pay up the remaining balance. And if not, if the DAOs don't send the treasury funds, then the collateral would be liquidated. And after liquidation, if there's still some remaining balance, then the DAO will receive the notice of the default, urging it to catch up with the payment immediately. And the notice includes a negotiation grace period during which the DAO can privately work with the investors to bring the accounts up to date. So, and if finally they fail to negotiate, I think the DAO is in default. So, which is reported and recorded, recorded and permanently into an on-chain credit history of the DAOs. So, yep, that's the whole process.
Excellent, thank you. And you did mention earlier that there was going to be probably not in this call, but like just I think earlier this week you did touch upon this off-chain price discovery mechanism for that was issuing the bond vouchers more later on. Do you want to maybe talk a little bit about that?
Yes, I think that's the mechanisms behind the bond voucher issuing. So when the DAOs come to our protocol to mint vouchers, there are a lot of things to be considered. One is the price, right? So what's the exact, or what was the a fair, a kind of a APY they should offer to all the investors, right? So for this point, we take a off-chain price discovery kind of approach. So we would just build such kind of a platform to just match the investors and all the DAOs, the capital, the supply side and the demand side. So that's one thing. And also we would allow the DAO to take a Dutch auction model to sell their bond voucher to find out the fair kind of value or price of the bond voucher. That's the first point. And secondly, we also allow the DAOs to take the whitelisting, so they can mechanism they can just a you can select these some selected a kind of groups to be to sell to offer the bond voucher. That's the second point. And the third point would be if finally there are some unsold vouchers, they will be DAOs will be able to burn the voucher and just redeem the collateral a on a pro rata basis. So that's the third point. And the fourth point is that also for DAOs, I think if they have some a bond vouchers themselves, they will be able to sell the bond voucher on secondary as well. So, but one thing I need to introduce here is that we have two markets. One is a primary market. It's called IVO, Initial Vouchers Offering, and secondly is soft marketplace. So for all the DAOs, they will be able to, select which marketplace to offer the bond voucher. So firstly, they would take IVO to offer the bond voucher, and also if there are some unsold vouchers, they would be still able to take the unsold vouchers to soft marketplace to sell them to anyone else. Yeah, that's it.
Thank you so much, Ryan. Okay, I think we've covered pretty much everything there is to know about the sale that's coming up next week. Is there anything else you would like to share to DAOs or investors listening to this call, either today or later? Ryan, I think Ming just lost the speaker role. Ming, could you perhaps, Ming, could you please request one more time? I'm going to have my colleague approve you. One more time.
Yes. So maybe I should express my opinion on this topic first.
Sure.
Yeah. Yeah, so after we have push out the convertible voucher, the previous product lines, we found out that there's really a pain point between the investors and the DAOs that all the DAOs they need to take on debt. They do have credits, they would repay the loan for sure, but there's no way to to support liquidity to all that kind of those of the DAOs in a debt through a debt instruments. So for all the investors, especially for all the yield farmers, they are looking for some very stable and sustainable kind of fixed income instruments. But as you know, nowadays the yield farming, the APY is not that high, and also they have to bear the risk of the hacking, right? So oh, hey, Shiva, right?
Yeah,
Yes,
yeah.
we can hear you.
Actually,
Do you have any question?
yeah, my question is from day to day, do you guys satisfied by staying out? When you have started
Oh, can you hear the guest? Yeah, I cannot hear you.
Yeah, I couldn't hear his question. Maybe we
me neither.
the question.
Me neither. Yeah, maybe the connection's really bad over there. But yeah, Ryan, you can finish up what you're saying.
Yes. Just a few words. So yep, and we really believe that there's a pain points, and investors are looking for some sustainable kind of fixed income products, and they also do need to take on that. Then that's why we create these products. I think now is a very good timing for all the investors and for all the DAOs to participate in these products, and we are confident because we have talked to over 30 institutional investors and also over 20 DAOs already, and both of the sides, both sides are quite interested in this new kind of instruments, and yep, that's the point for me.
Thank you, Ryan. We have a few listeners raising their hand to speak, but before giving them the speaker role, the Ming, do you have anything to add?
No, I think we're really energized and excited to do this first ever bond voucher, and I think it's gonna set the precedent in the industry.
Yeah,
Awesome,
maybe
awesome.
I need to I should add one more point is that the bond voucher issued by Strips Finance this time is quite hard, is quite hot and popular among the investors. So as we know, it's oversubscribed in the private market already. So yeah, we are so excited about your offering, Ming.
Awesome,
Yeah,
awesome.
definitely.
Thank you too. And I know, Ming, you said you had to take off a little early today. If you need to, feel free to take off or just hang out here with us. We're just gonna answer some questions from the audience and the community. I have some giveaway questions, so feel free.
Yeah, I can probably take one question.
Awesome. I saw our another co-founder, Mike, wave the hand just a minute ago. Mike, do you have a question? Maybe my coworker Ethan can pass the speaker role. Or we can go back to that question. The someone like was okay. No more questions. Okay. Okay. I guess I will ask on behalf of two community members. I think one question. I have to go back to the question. Just give me one sec here. Okay. So we have a question from Caddy Cooley. The question is, can you explain to us what's the process to buy? What's the process like to buy Bond Voucher, and how's the release system of the token work? Or I guess the question is, how is the release system of the voucher work? The first half of the question we've already covered in the earlier part of this call, and maybe Ryan could explain a little bit about how the release system works. How do investors claim token later on?
Yes. I think for this question, you can just come to our protocol, our products. There are several functions there. So one is the account. So it's a place where you can manage your bond voucher and then claim the tokens from the bond voucher. So that's all about managing. And in terms of the purchasing, you can just come to our IVO, that function, that module, and then you can find out the strips finance case there. Maybe we will list the order maybe 2 days later. So you can just participate in the offering after we list the order. And yeah, it's quite simple. You just inputs the amounts that you would like to purchase and click confirm. Then you would just pay for this order, pay for this bond voucher, and yeah, that's it.
Thank you, Ryan. Thank you. And we have another question. I guess either one of you can answer. Is that from day one till today, do you guys feel satisfied by seeing your achievements and progresses when you look back to the day when you have started this project? Is Ming still here? Ming's not here anymore. I guess, Ryan.
Yes.
Could you talk a little bit about this?
Could you repeat the question?
Yeah, just like from day one, when Solv Protocol was founded to today, do you feel happy and satisfied about the achievement and progress that the protocol has made?
Yeah, sure, definitely. So we absolutely quite excited about what we are doing and what we have done, what we have shipped. So I just it seems our official account just tweet about the $28 million trading volume milestone, right? So yeah, we really believe that financial NFTs is the future, and what we are doing is the first thing is to mint different kind of financial NFTs. So for this one, we that's why we just build this bond voucher. So it will empower Solv to get access to more different a potential cooperation with the DAOs to issue bonds or issue kind of a financial NFTs, right? That's the first thing. The second thing is to build a frictionless or very user-friendly kind of marketplace for financial NFTs. And it seems now when we talk about financial NFTs, people would say, "Oh, Solv is building something something about a financial NFTs, and they have got already $20 million trading volume. It's still not that much, but yeah, it's a nascent space, but it's really promising, right? So yep, that's all from me.
Awesome. And another follower asks, can we stake a voucher for reward?
Oh yeah, that's also a good question. So because we don't have a tokens yet, we don't have launched the token yet. So now it's not a good timing for us to conduct liquidity farming or yield farming for all our users. But yeah, because we are cooperating with some of the NFT lending protocol, so I think you would be able to collateralize the bond voucher on some NFT lending protocol, like a Taker protocol, Pine, or Themis kind of projects to borrow against your bond voucher. While you can earn some tokens, you can get some rewards from those of the NFT lending protocol. So that's something I think is very very exciting. So yep, that's the answer.
Awesome. Thank you, Ryan. Thank you. We have two more speakers. Maybe start with Grace. Grace, do you have a question?
Yeah, thank you, Johnny. I'm not sure if my connection is stable here. So I would say that the bond voucher is a quite impressive instrument given the current market. So my question is, are there any other bond instrument in the DeFi space? Or should I see that are there any other product that Solv Protocol gonna launch in the future, maybe?
Yes, yes. I think, from my perspective, we are the first a bond instruments in the space, bond voucher actually. So, but we can see some potential competitors like a Porter Finance, that kind of a projects. They are taking ERC 20 token standard to build some bond instruments and to allow the DAOs to mint and sell bond kind of instruments as well. So, but yeah, we firstly we moved very quickly and we got over 10 projects cooperated projects already, and over $200 million kind of a offering commitment. And also we don't think now it's still a very nascent a kind of stage. So we really believe that all the potential kind of competitors are co-builders compared to a competitors. So yeah, we are just co-build this kind of very nascent space, and to just educate the users together, to educate all the DAOs and investors that that bonds is a really powerful kind of instruments that can build the alignments between the both parties of the investors and DAOs. Yeah.
Thanks, Ryan. And then Steve.
Yeah, thanks. I think it's a very good project. I think it's more like a DeFi for the DAOs. I think. My question goes to Ryan. So my question is for my understanding is 20 million bond voucher. Is it a synthetic product, or it's the investor can have a choice? So, for instance, you have 10 DAO. They want to collect money,
Yeah.
and I mean this is 20 million. Is we can select a certain DAO, or it's a synthetic product?
Oh, sure. That's a very good question. So of course, it's selectable for you. So you can when you come to our protocol, you'll find out that there are different DAOs are selling different kind of a bond vouchers, and then you just pick the one you prefer, right? So you would just evaluate the risk behind the a specified a bond voucher, and then you will say, oh, maybe the bonds from a strip finance is quite a safe, and also the APY is quite good. Then you take that one, but maybe you would, so it's very flexible. So that's the first thing. But yeah, maybe that's the the needs from you. But we can also see some needs that they don't want to select, they don't want to make a choice. They just say, oh, we believe bond instruments is very powerful, and then if there's any kind of solution to just package several bond instruments, bond voucher together, and then I can just invest into that kind of a package, right? So we won't do that by ourselves, but we will cooperate with some partners, some third parties projects together to package maybe some of the bond instruments to make the people, especially the retail investors, to get access to bonds more easily. So that's also one way one thing that we are thinking.
Okay, I think that's for the sales next week. So there will be a introduction for all the projects. I mean, so let's the investor to understand the risk and also the benefit, right?
Yes, exactly.
Okay, thanks.
Yeah, thanks for the question, Stephen. Cool.
Awesome. Thank you, Steve. Thank you, Ryan. Any more questions from the listeners? Okay, I guess that's it. Okay, I'll just recap the sale for listeners who came in late and who has just heard about this sale for the first time. So Strips Finance will issue 2 million bond voucher on the Solv marketplace Arbitrum next week on the 12th. If you're an investor, you can purchase any amount above 10,000 US dollars and up to 2 millions. And you can buy as many vouchers as you like. And I've been saying this a lot of times. This is the beauty of the ERC 3525 token standard, which really allows you to split a single smart contract token into infinitely many pieces. And if you want, merge them back together into a single token again without affecting its parameters in any other way. And speaking of parameters, the Strip Bond Voucher office offers 13% APR with a massive upside if the token spot price rises above 3 USDC on the date of maturity, which is July 11th, 2022 at the earliest, or exactly 90 days after you buy. Okay, so thank you for listening, and thank you, Ryan and Ming, who is not here anymore, for joining us. If you're listening to this, please give Solv Protocol and Strips Finance a Twitter follow. And if you're a DAO operator interested in getting started with the Solv Voucher products, drop into the project collaboration channel in our Discord server via the link in our official Twitter bio and fill out a questionnaire. If not, do still consider becoming a member at our server for all the cool events, airdrop opportunities, financial NFT related education, or just for memes, really. Okay, once again, thank you, Ryan. Thank you, Ming. Until next time.
Yeah, thanks for your time, guys. Yeah, have a good day.
Thank you.